The January effect is a stock market phenomenon where, historically, small-cap stocks have generally enjoyed larger returns in January compared to other months. This small-cap positive effect has been attributed to various factors, such as end-of-year tax considerations and portfolio rebalancing. Investors interested in this January pattern may consider researching small-cap shares and exchange-traded funds, ETFs, further. Today, we are introducing one such ETF, namely the Vanguard A&P Small Cap 600 Growth ETF with the ticker VIOG. Before we progress any further with our presentation, please remember that this video, as well as all our presentations, are for educational and informational purposes only. Before investing your capital, always consult a registered financial advisor in your jurisdiction. Also, please remember to like this video and subscribe to our channel. First, a bit of background on small-cap stocks. With a market capitalization between about $250 million and $2 billion, small-cap shares offer significant growth potential but tend to be more volatile and sensitive to market shifts. Small caps are typically poised to benefit from structural shifts, prioritizing supply chain resiliency and increased spending on domestic infrastructure. They are also rich in pure-play companies and tend to have greater domestic exposure, which can be advantageous in certain economic conditions. While small-cap stocks offer higher growth potential, they are also riskier than large-cap equities. However, they have historically outperformed the more established large-cap stocks in bull markets. As we navigate the dynamic financial landscape of 2024, predicting what January holds for equity investors is a formidable challenge, especially in the aftermath of the tumultuous year that was 2023. Yet, for those who still hold faith in the enduring magic of the January effect, exploring small-cap shares and exchange-traded funds, ETFs, could prove rewarding. Our exchange-traded fund for today is the Vanguard S&P Small Cap 600 Growth ETF. Its ticker symbol is VIOG. At present, the Vanguard S&P Small Cap 600 Growth ETF eyes hovering around $107, close to the top of its 52-week range. Its dividend yield is slightly over 1%, and the expense ratio is 0.15%. The Vanguard S&P Small Cap 600 Growth ETF, or VIOG, invests in a range of growth stocks in the S&P Small Cap 600 Index. This exchange-traded fund started trading in September 2010 and currently has well over $550 million under management. VIOG, which has around 350 holdings, tracks the returns of the S&P Small Cap 600 Growth Index. In terms of sectoral weighting, industrials has the highest allocation with almost 20%, followed by information technology, or IT, financials, healthcare, and consumer discretionary 8.30. Semiconductor company Rambus, mechanical, electrical, and plumbing services, company Comfort Systems USA, cosmetic and skincare company ELF Beauty, cloud-based supply chain management solutions, provider SPS Commerce, and Industrial Motion, power, control, and automation technology solutions. Provider Applied Industrial Technologies lead the fund. Over 12.1% of the fund's assets are in the top 10 businesses. In the past year, VIOG has returned more than 18%. Potential investors who follow various fundamental and technical indicators may be wondering if many of the names in the ETF have become frothy given the rally we have seen in the U.S. equity markets in 2003. The trailing PE and PB ratios for the fund are around 14.4 and 2.1 respectively. Interested investors may want to look for a pullback toward the $100 level for a better entry point. In another episode, we plan to introduce another small-cap ETF, We hope you have enjoyed this presentation. Please remember to smash the like and subscribe buttons.